Let's be real. The investing world can feel like a minefield. You've got $100,000, you know you want to grow it, but making the wrong move could cost you big. That's why today I'm focusing on smart moves you can make with Vanguard's top 5 ETFs. Options that could help make you dodge those common investment mistakes. In this video, I'll show you the 5 best Vanguard ETFs. I'll show you how much you can earn from a $100,000 investment in each. And in the end, I'll show you a Vanguard ETF that has the potential to turn a $100,000 investment into a portfolio valued at over $21 million. You're probably wondering how I've picked today's top 5 Vanguard ETFs. Well, it's all about the money. I've selected these ETFs based on their potential to maximize returns from yours and John's $100,000. Using my dividend forecaster calculator, I've crunched the numbers on dividend yield, growth, and capital appreciation to reveal some very impressive results from Vanguard's lineup. So without wasting any more time, let's dive in, starting with number 5, the Vanguard S&P 500 Growth Index Fund ETF, ticker symbol VOOG. This is a growth-focused ETF that tracks the S&P 500 Growth Index, a collection of large U.S. companies expected to grow faster than the overall market. It includes companies like Apple, Microsoft, Nvidia, and Meta, which are leaders in technology and communications. As for its total holdings, technology stocks make up over 51% of VOOG's holdings, followed by communications, which is 12.53%, and consumer cyclicals, which is 11.44%. With a low expense ratio of just 0.1%, VOOG is also an efficient choice. Its dividend yield, while modest at 0.64%, is less of a focus given the growth-oriented strategy of the ETF. This low yield is balanced by capital appreciation, as the ETF primarily prefers capital gains rather than income generation through dividends. For a long-term investor, VOOG's impressive momentum and returns are very good too. Over the past year, VOOG achieved a 38.49% total return, which is significantly higher than the median of similar ETFs. Over 3 years, the total return was at 29.97%, and over 5 years, it reached an impressive 127.07%. Over the last 10 years, on average, it has increased its share price by 13.59% each year. These numbers show VOOG's resilience and growth potential during market upswings, especially during a period when tech stocks have surged. Let's break down the potential returns on a $100,000 investment in VOOG for you and John. After 1 year, your investment could grow to around $114,230. If held for 5 years, the value could increase to nearly $193,677 based on historical returns. After 10 years, your initial $100,000 could more than triple, reaching $372,031. Over 20 years, the investment has the potential to reach a valuation of $1,353,176, and in 30 years, the investment could skyrocket to $4,873,373. Next, and fourth on our list, is the Vanguard Growth Index Fund ETF with the ticker symbol VUG. This ETF is an excellent choice for growth investors. It tracks the CRSP US Large Cap Growth Index, which includes companies like Apple, Microsoft, and Amazon. Like VOOG, VUG leans heavily on technology stocks, which account for 50.84% of its holdings. It also has significant exposure to communications, which is 13.87%, and consumer cyclical stocks, which is around 12.18%. VUG's performance has been nothing short of stellar. Over the past year, VUG returned 38.95%, surpassing the median for all ETFs in this category. Over a 5-year period, the total return was 142.25%, making it a formidable option for those seeking long-term capital appreciation. What makes VUG stand out is its impressive 30-year projected growth potential. But before that, let's see what it'll cost you. The ETF has a very low expense ratio of just 0.04%, making it one of the cheapest options available to growth investors. Its dividend yield is 0.52%, slightly lower than VOOG, but again, the emphasis here is on growth rather than dividend income. So, if you and John invest $100,000 in VUG, the projected returns are very compelling. After 1 year, the investment could be worth around $114,850, similar to VOOG. Over 5 years, the value might increase to approximately $199,062. After 10 years, your $100,000 investment could grow to around $393,390. Looking 20 years ahead, the investment could reach $1,518,507, and after 30 years, it could climb to $5,819,723 with capital appreciation of more than $5.5 million. You might think a 55 times return is the best Vanguard can offer, but think again. We've got a Vanguard ETF that could turn your $100,000 into $21 million, a 210 times increase. Stick around to find out which one. Next up, at number 3, is Vanguard Mega Cap Growth Index Fund ETF with the ticker symbol MGK. This ETF focuses on the largest, most influential companies within the U.S. market, known as mega cap stocks. These are the behemoths of the stock market, representing firms that are industry leaders in sectors like technology, communications, and consumer services. As of the latest holdings breakdown, technology dominates this ETF, comprising 52.5% of the portfolio, followed by communication services, which is 14.64%, and consumer cyclical, which is 13.62%. MGK is heavily weighted toward tech titans such as Apple, Microsoft, and Nvidia, which together make up a substantial portion of its top holdings. Apple alone constitutes 13.54% of the fund, while Microsoft and Nvidia account for 12.7% and 11.31%. This strong concentration in the tech sector gives the ETF high growth potential, especially during market periods when technology is outperforming. And the fund's low expense ratio of 0.07% makes it an affordable option for long-term investors. But the main focus here is appreciation. The 5-year dividend growth rate is 6.78%, showing that dividend payments are increasing steadily, though at a slower pace compared to other high-yield funds. In performance terms, MGK also shines. It has delivered impressive momentum in recent years. Its 1-year total return of 39.06% significantly outpaces the median return for ETFs in this category. Looking at longer time frames, the 3-year total return is 35.72%, and over 5 years, the fund has provided a 154.13% return. On average, it has a share price appreciation of 15.12% each year. This strong growth underscores MGK's ability to capitalize on the rapid expansion of mega-cap companies, particularly in the tech space. Now, if you were to invest $100,000 in MGK, the projected returns would be quite substantial. After 1 year, your investment could grow to approximately $115,570, reflecting a 15.12% average annual return. After 5 years, the value might increase to around $205,343, and after 10 years, the investment could be worth $418,666. Looking further ahead, a 20-year investment could result in a portfolio valued at around $1,723,460. And after 30 years, the fund could grow your initial $100,000 to an impressive $7,059,793. Taking the second spot, we have the Vanguard Russell 1000 Growth Index Fund ETF with the ticker symbol VONG. This ETF tracks the performance of the Russell 1000 Growth Index, which includes large and mid-cap U.S. companies that are expected to have above-average growth rates. VONG's sector allocation is similar to other growth-focused funds, with technology comprising over 50% of its holdings. However, VONG also offers some diversification into healthcare, which is 8.46%, and financials, which is 6.08%. Which which can provide a measure of stability during periods of tech sector volatility. VONG is also an inexpensive option with an expense ratio of just 0.08%, which is significantly lower than the category median. This low-cost structure helps maximize returns for investors. While the dividend yield of 0.63% is relatively low, it offers a 10-year dividend growth rate of 6.44%, reflecting a steady increase in payouts, though the yield itself remains modest. Now, if you and John were to invest $100,000 in VONG, the potential returns are compelling. After 1 year, the investment might grow to approximately $115,690. Over 5 years, this could increase to $206,351. And after 10 years, the value could rise to around $422,277. In 20 years, the portfolio might be worth $1,743,767, and after 30 years, the investment could potentially grow to $7,135,628. Look, these numbers aren't just magical numbers on a page. VONG has actually been performing over the years. It has been a solid choice for growth investors. The ETF has delivered a 1-year total return of 39.12%, and its 3-year return is 37.03%. Over 5 years, the fund has provided a total return of 148.74%, outpacing many of its peers in the large growth category. This exceptional performance is driven by the rapid expansion of the companies in its portfolio, many of which are at the forefront of technological innovation and consumer trends. Finally, topping our list of the 5 best Vanguard ETFs is none other than the Vanguard Information Technology Index Fund ETF, ticker symbol VGT. This ETF tracks the performance of the MSCI U.S. Investable Market Information Technology 2550 Index, offering exposure to large, mid, and small-cap U.S. technology companies. Technology stocks make up 99.29% of its holdings, with a small allocation to other sectors like industrials and financials. The fund's top holdings include, of course, tech giants like Apple, Nvidia, and Microsoft, accounting for nearly 44% of the total assets. VGT holds a total of 320 stocks, providing diversified exposure within the tech sector, focusing on companies leading innovation in AI, cloud computing, and semiconductors. And over the past years, VGT has delivered exceptional performance. Over the last 5 years, the ETF returned 186.22%, while its 1-year and 3-year returns are 38.37% and 44.7%, respectively. The momentum grade on VGT is A+, reflecting strong growth. Despite short-term volatility, the ETF maintains impressive long-term returns, driven by the rapid growth of its key holdings. However, its dividend yield is relatively modest at just 0.65%, which is not surprising as the fund targets capital appreciation. Still, the 10-year dividend growth rate of 14.74% and 18 consecutive years of dividend payments highlight its potential for rising payouts. Now, if we run the numbers with yours and John's investment of $100,000 in VGT, the growth potential is significant. With an average annual return of 19.2%, the investment could grow to approximately $119,850 after 1 year. In 10 years, the investment has the potential to reach a valuation of $605,579. Over 20 years, your portfolio could be worth $3,607,796. And after 30 years, the investment could potentially grow to $21,271,983, paying an annual dividend of $30,845.